All right, we're going to do our relatively regular review of the 30 ETFs in my ETF list. And as usual, I'm going to break these up into two equal halves, listing in alphabetical order, and just say a few words about each one. We begin with commodities, DBC. Oh yeah, that's my habit of uttering the ticker symbol even though it's right in front of your face. I will try to refrain. Anyway, there is the topping pattern, and we clearly are finding some support at the midline here. Got to bust through that. If we can, then it really sets us up for kind of more interesting trip. And I don't find DBC intrinsically interesting to trade. As you can see, the dollar value moves very, very little. In this instance, moving from 22 to 20 would be a huge move, and that's obviously very tiny. It's $2, it's 10%. But it is an interesting little proxy just to kind of see, like, what is oil and gold probably going to do. Here are the diamonds. Now, I'll just mention I have 4 ETF positions. This is one of them. It's probably the one I'm least enthusiastic about. I'm kind of wondering what I was thinking, but we'll see if I regret it or not. I got into this on Friday. Maybe what I was thinking was that this thing has suffered the least in this little downturn that we've enjoyed for the first portion of this year. And my supposition is that it'll start participating in that weakness, but I could be wrong. I will definitely be wrong if we get above 377.81. That's what I'm using as my stop loss on this. So, it's not any kind of great setup. It's just been dicking around here for days and days and days. But we'll see. We will see. Yeah, I'm not a strong belief. What do you call it? A high conviction trade? Not at all. EEM. Oh, geez, I'm doing it again. You try stopping doing something you've done for 20 years. The emerging markets is still above this trend line, so that's slightly bullish. It's a weird little critter, though. I don't put a whole lot of stock in what EEM is doing. Here is the. I guess one of the reasons I'm in the habit of doing the ticker symbols is because sometimes it's hard to describe what these are. Like, it's a BlackRock Institutional Trust Company. This is the SANS North American. This is worldwide equities. And the cool thing is that long term, it has been persistently above this broken trend line. So here, 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 each time. And I'm supposing it will re-weaken as it has in the past. China continues to be weak. It was one of the few markets in the world that was down in 2023. And here we see the right triangle completed, and it's been persistently below that starting on December 1st. Miners are also weak. I talk about this soured pattern here. Here's the inverted head and shoulders. It cut above it, failed quickly. Fell all the way down, found support at this trend line, went blasting higher, double topped here, so it matched this top, and has retreated once again. So it's just a big fat mess. I think it's just going to bang around here in the upper 20s and the lower 30s for a while. And much the same can be said of the junior miners. Same inverted head and shoulders, burst higher, fell into it, got it even higher still, and then fell back again. So in this case, kind of a mid-30s sort of range. Here's gold itself, whose burst above this level, it would be crucial to getting the miners to participate. It really has to get above and close above this 193.18 level. As it is now, it seems really hamstrung by this line. It can't seem to really muster its energy past there. Here's the small caps, IWM, always interesting. And of course, this is one of those 4 positions I mentioned. Feeling much, much stronger about this than, say, the diamonds. It's been doing just picture perfect. You can see here that at the top of the sine wave, we started to tumble nice and hard. We actually even got below this price gap, which is good. And I would think that the next really meaningful level of support will be somewhere around 184 or so. The Fibonacci is right here at 180.97, but somewhere in this vicinity, the low 180s, let's call it, I think would be a pretty tough area to get any, ultimately in many weeks from now, we might get down to the mid 160s. That would be amazing. But the most ambitious I'm looking at now is somewhere around the lower 180s in the course of the weeks ahead. IYR, this one got just a little bit above the Fibonacci in its trend line, but it was repelled. And it's got support at this line, and of course at this line. As it is now, not a very exciting trade. It is nice. It's a little reassuring to see that it could not get past those two resistance levels. IYT, which is important in as much as and from Dow theory terms, it did not confirm the industrial strength. It did not have lifetime highs, and this red line here has been doing a nice job of keeping prices at bay. This is the regional banks. And it's a lot like, strangely, it's a lot like the transports. It's got this slow, slightly descending trend line, and it has done a nice job of zapping this fella. It just sort of banged it against for a while and then started to tumble beneath. But yeah, those are very, very similar charts. I kind of lost track of myself there. Did I go backwards? Am I losing my mind? Maybe I went backwards. I think I did go backwards. Okay. I'm sure you'll forgive me. It's been a long week. All right. Corporate bonds. This one is dangerously close to failing its breakout. It broke out with tremendous force on that horrible day of December 13. Did I mention it was a horrible day? And I'd love to see it fail there. That'd be a nice moment. So that looks quite prone. Municipal bonds. This also, on the same dreadful day, went blasting above it, and it's not nearly as close to slipping below that again. And the last of these 15 is the S&P 100 ETF, and we were at lifetime highs just a couple of weeks ago. We're weakening a little bit, but really nothing to write home about. It's just kind of drifting. So, Borefest USA on that one. All right, that's the end of this.